Welcome back to FT World. There's not been a lot of good news emerging from the South African economy since last year's violent rash of mining strikes. And by comparison with some other parts of sub-Saharan Africa, economic growth is sluggish. But when the recent slowdowns put in the context of the past 20 years of change, Goldman Sachs finds the picture a lot less bleak. With us is Colin Coleman, Managing Director of the Investment Bank in South Africa, and author of a new report looking at the evolution of the South African economy since the transition to black majority rule. So Colin, when you crunch the numbers down, what do you find that's reassuring to South Africans?
Well, effectively from 94 to 2013, we've seen a triple-fold increase in the GDP. We've seen a 40% rise in GDP per capita. We've seen a very significant decline in inflation, roughly from 14% pre-94 to an average of 6.5% since. And so a dramatic turnaround in the economic balances of the country. At the same time, you've seen a rise in the middle class. So effectively 10 million people added to the middle class and the upper class in the last 10 years. And we've seen a very significant support and cushion for the poor in the form of social welfare grants, rising from 2 million to 16 million in the period 94 to 2012. So a very significant macro development.
And yet there are still some very profound imbalances in the South African economy, notably when it comes to race. What did you find when you crunched those numbers down?
Effectively, the most outstanding problems, which are structural, that we are left with in the economy is very high youth unemployment. We have around 36% of the population. If you take those that have both given up looking for work and those looking for work, it's roughly 7 million people looking for work. Of those, 70% are youth under the age of 34. We have a significant Gini coefficient income disparity, and most of that is racially determined. So you have roughly around 80% of the African population who are poor and around 80% of the white population who are on the upper income band. So that racial disparity and the structural unemployment are the two standout problems and structural challenges moving forward.
And what's the prognosis? I mean, if you look at the areas of the economy that have provided a lot of the labour employment in the past, those are in relative decline, aren't they? Manufacturing and mining.
Mining and manufacturing are the key fulcrum that need to be stabilised and revitalised. There's no question that mining is a multiplier for exports and job creation, both into the manufacturing sector and more broadly. And mining is clearly the area of most focus and most polarization in the last short period. And this report sheds light on the need for mining to be revitalized. The key issue is that wage inflation has outstripped productivity, effectively 3% real wage inflation over the period and about a 4% decline in productivity. And we need to invert that relationship so that productivity outstrips wage inflation. Not that we want to have a low wage economy in South Africa because it's a highly unionized, militant labor environment. But what we do need is we need labor and business and government and labor to cooperate to create a win-win environment for economic growth.
Clearly South Africa has the most sophisticated financial sector, the most developed economy in sub-Saharan Africa, but there is speculation that Nigeria will overtake South Africa as the biggest economy on the continent in coming years. What sort of an impact do you think that will have?
Well, I think the positive outcomes for Nigeria and the sub-Saharan Africa region are symbiotic for South Africa in terms of growing South Africa. The fact that we have a good neighborhood is good for South Africa. And, I think South Africa and Nigeria have reason to reinforce each other's successes. There may be competition between the economies. Nigeria is 3 times the population, but it's slightly smaller as an economy today. But growing at 7.5%, Nigeria, with its 2 million barrels of oil production and its huge population, should overtake South Africa at some point in the future. Maybe it's 5 years, maybe it's 10 years. But in effect, a growing tide will effectively lift all boats, and South Africa is certainly one boat that will lift alongside.
And very quickly, how are South African companies positioned, do you think, right now to take advantage of higher growth in the rest of the continent?
I think they're extremely well positioned. South African companies have excellent management, excellent technical capacity, implementation capacity, logistic capacity, and so that driving African development, particularly the ShopRites, the MTNs, the Standard Banks that have really outperformed in the non-South Africa space, have done very well with it. And so a combination of higher margins, bigger populations, higher growth in the sub-Saharan Africa context will help those companies, and they'll benefit from the excellence of these South African companies.
Colin Coleman, thank you very much for your time.
Thank you.